So, good evening, everyone. So, today I'll be presenting on Arman Financial Services. Again, a diversified NBFC, diversified, but majorly they are a microfinance NBFC. But yeah, they serve to underserved rural and semi-urban retail markets, pretty similar to Fusion. And their vision is to materialize the dreams of people who need a monetary push. So, let's start with knowing the company. So it was originally incorporated as Arman Lease and Finance Limited in 1992 by Mr. Jayendra Patel, and they started their operations with two-wheeler financing and microfinance lending, and they received their license for operations under their subsidiary that is called Namra Finance in 2013, and then thereafter the microfinance operations were carried out solely by their subsidiary. And then they cater to the low income customers by providing lending services for two-wheeler financing, MSME and microfinance segment. And they are registered, yeah, the Arman Financials is registered as a deposit taking NBFC, while their subsidiary Namra is registered as a non-deposit taking NBFC MFI. So they started their operations in Gujarat, and yeah, their initial focus was on providing loans to SMEs and micro enterprises, and then they gained popularity basically, and because of their customer centric approach and flexible loan products, and yeah, thereafter their loan portfolio grew much more, and they expanded their operations to other states in India, and diversified their offerings, and they introduced new loan products to like personal loans, affordable housing loans, etc. And they ventured into new geographies like Rajasthan, Maharashtra, and Madhya Pradesh. So, yeah, they are committed to supporting India's financial inclusion objective by investing in the small dreams of the unorganized sector residing in rural and semi-rural localities. And their mission is to provide access to affordable credit and other financial services to those who are excluded from formal banking channels due to various reasons such as lack of collateral, credit history, or documentation. Yeah, and yeah, so today, after more than 25 years, they have a presence in around 10 states, and their OM is 1,000 crore plus, and more than they have around 6 lakh customers now. So we'll use a timeline to kind of understand their story better. So yeah, in 1992, like I said, they were incorporated in Gujarat as an NBFC. In 2006, they received their NBFC license. Sorry, before that, 2005, they were listed on BSC, and they got their license in 2006 and started offering loans to MSCs in Gujarat. And in 2008, they expanded operations to Rajasthan and Maharashtra. And 2011, there was a company called Incofin. There is a company called Incofin Investment Management. They invested in Arman. And 2013, they received their NBFC MFI license from RBI, which actually they were the first in India to obtain this license for their subsidiary, Namra Finance Limited. And yeah, in 2014, they expanded to other states like Madhya Pradesh, Chhattisgarh, and Uttar Pradesh. And in 2015, they launched their digital platform, which enabled customers to access loans and other financial services online. And 2016, they raised 100 crores through IPO by listing on the NSE. And in 2017, they also expanded to Bihar, Jharkhand, and Odisha. So yeah, and then you can see in 2020, their disbursements crossed 875 crores, and in 2021, their OM crossed 1,000 crores. And yeah, and recently in 2022, they have raised 115 crores. So yeah, this 2020 was also their silver jubilee. 25 years they had completed as an NBFC. So moving forward to their shareholding, so we can see it is not a promoter-driven company as such, but yeah, less than 50% is held by the promoters, 28%, and majority is held by public. Now I'll talk about it further. It's public as in there's a company in it. So FII is 5% and DII is around 1%. So let's talk about the promoter holdings first. So Jayendra Patel has around 7.35%. His wife Rita Bain Patel has 5%, and his son Alok Patel has 3%. He also has another son who's also a part of the board. He held shares previously, but then I think he sold his shares. Uh, then yeah, so like I said, promoter holding is low, and then they don't have any pledged percentage. And yeah, now this promoter holding, actually it used to be 40%, but then there was this company called Safe Partners, and which is now known as Elevation. I'll talk about it further, but yeah, so they invested by CCD, compulsory convertible debenture, which means basically that it has to be converted into stock at its maturity date. So in 2019, they were given 25% holding net. And so the 40% holding of the promoters went down to 28 or 27%. So not sold off, but then that's why the public holding is higher. The company holds around 22%. We'll go into it, but yeah. So these are basically the people who are a part of the promoter holding. The one is the majorly people from the Patel family itself, that is Jayendra Patel and his wife, sons, and then their wife Sajni, and then Manaki Wala. Actually, he used to be a whole-time director. He resigned from the board because of his health issues, and also it was his retirement age according to him. And yeah, so they also actually sold a lot of they also sold a lot of their shares in the market during that time. I think it was around 2017. And yeah, they did not sell it to the Patel family itself, but to other people outside. That's why a lot of individual investors are also there in the company, hold shares of the company. Then there's this company called Namra Holdings and Consultancy Services, L- LLP, I think so that should be. But yeah, so that company is basically an LLP company based in Ahmedabad, but it is owned by the Patel family itself, and it is a non-government and a private unlisted company basically. So they hold around 11%. Next, we go to their public holdings. Like I said, Elevation Capital, which was previously known as SAF Partners. So that is a venture capital firm. It is they're based in Mauritius, and they have a portfolio of publicly held stocks worth around 800 crore rupees. And they're also involved in small business financing, etc. And then there's this company called Neighborhood Investment Private Limited, and it is a private company based in Rajkot, Gujarat. And yeah, that's also then there's also non-institutions, as in individuals. Like there are a lot of around 6 people, I think so. They hold around 1% of the 1% each of the company. Uh, then FII, there's one company called Highwest Global, a global master fund. It is a hedge fund that is managed by a company called Highwest, and it is Oregon, like USA based hedge fund manager. And yeah, they also hold like two stocks in total worth around 80 crores or something. So they have a 3.24% stake in the company. Then they also have the subsidiary. Like I said, the subsidiary is actually, in this case, it would be the main company. So it feels as if Arman is the subsidiary, but that's not the case. But they do entirely their microfinance loans, they do entirely through their subsidiary, that is Namra Finance. And they hold, it is a wholly owned subsidiary, basically. So let's talk about their business. We can see their products. They are microfinance, MSME, two-wheeler loans, and individual business loans. So with microfinance, it's something similar to Fusion. So they offer loans to women through their subsidiary again, Namra Finance. And the average ticket size is INR rupees 45,000 for the first cycle and second cycle. And third cycle, it's 20,000 to 70. It ranges from 20,000 to 75,000 rupees. This basically means that whoever borrows, they can access funds ranging from 20,000 rupees to 75,000 rupees. And this depends on their repayment history with the company itself. So, and the tenure is 18 to 24 months. So they also get a sufficient time to repay the loan without putting pressure on their finances. They additionally they also offer flexible repayment options that are like tailored to meet their needs, etc. So, and the MSME division, basically, it was launched, I think, in 2016. So, to service the underserved, like non-group micro enterprise segment of the Indian markets, according to them. So, it was like they said, it was their conviction that the customer segment for less than 50,000 rupees loans are being serviced by the group-based model of the NBFC MFIs, while the greater than 5 lakh rupees loan segment is being served by banks and other NBFCs. So they felt there was a vacuum for loan products between 50,000 and 5 lakhs. So especially with the non-salaried rural segments who do not have the necessary paperwork to approach the banks for personal loans. So it is this vacuum that they basically wanted to fill by starting their new MSME division. Uh, One distinguished factor for their MSME loan is that the collection it takes place in cash at the doorstep of the customer. So this ensures that they get to service the customer segment, like the people who are credit worthy, but lack access to a bank or lack the discipline to deposit the EMI into their accounts, where it can be withdrawn using any mandate. So more importantly, according to them, their cash EMI repayments allow them to create a personal touch with their customers and meet them once a month. So this also helps them receive timely repayments. And then they also provide secured loans to self-employed or salaried customers in the informal segment in semi-urban or rural areas for purchasing two-wheelers. So this is their two-wheeler segment. And they operate by leveraging, their relations with two-wheeler dealers, and they have established like a space with more than 60 dealer showrooms which provide majority of the business to their two-wheeler segment. So they have tie-ups with more than 70 showrooms, and yeah, so this makes the paperwork etc easy for them. The loans are basically available to self-employed and cash salaried customers who may not have collateral or credit history. So the loans are secured by hypothecation, which means that the vehicle that they buy, the borrower, customer who buys the vehicle, that vehicle itself serves as the collateral. So yeah, and lastly, they have this individual enterprise or working capital loans for small rural businesses in low competition areas. So yeah, if we see the OM split, like I said, majority of their OM is from microfinance, which is done by their subsidiary. That is, so majorly they are a microfinance NBFC, but they have diversified and they have included MSME and two-wheeler loans, uh, which and individual business loans, which contribute to around 19%. But yeah, majorly it's a microfinance business. So if we see even their growth for the past 5 years, sorry, from 2016, FY 2016, we can kind of see how they've managed to grow the microfinance business, and while their OM has increased, how the other segments have kind of declined or have been suppressed, but that is only because their microfinance is actually their main focus. But this other diversification, they have done fairly well. Not saying that they're they are uh, not they have not been able to increase the business in those segments, but yeah, they have done fairly well there too. But comparatively, it's not as significant. If we speak about their geographical presence, they primarily like serve like Fusion again. They primarily serve niche rural market areas where you won't see other banks etc. present. So that is their model, very similar to Fusion, and they have a strong presence in 6 states of India, namely Gujarat, Rajasthan, Maharashtra, Madhya Pradesh, Uttar Pradesh, and Uttarakhand. And they have also now like entered into two new states of Bihar and Haryana. As of the latest quarter, they had around they had 321 branches across all these states. And there's more, like I said, they have around 6 lakh customers, etc. And yeah, so out of these branches, 260 branches are dedicated to microfinance, while 57 are dedicated to MSME, and only 4 are dedicated to two-wheeler. So actually, the two-wheeler segment is mainly it's only present in Gujarat. Actually, the two-wheeler segment. That is why it forms such a small percentage of the total law. So yeah, so again, like all my other companies, this company too has a higher presence in the north, or majorly they are only present in the north, and they operate in small villages and other areas where traditional banking services may not be available. So yeah, they found that there is significant demand in this area, so that is their main focus. Let's go to the promoter and board of directors. Firstly, we have Mr. Alok Prasad. He's the chairman. He's an independent chairman. He's a well-known figure in the home finance industry of India, and he was the founder and CEO of MFIN, which is the RBI licensed self-regulatory organization for microfinance institutions. So he has extensive experience in the microfinance sector and has been instrumental in shaping the microfinance industry of India. So yeah, he was as a member of the National Housing Bank. He was closely involved with the policy formulation for development of the housing finance sector in India. He successfully steered the microfinance industry through their phase, and uh, yeah, he has also served as the chairperson of the South Asian Microfinance Network for the period 2013 to 15. Next, we have Mr. Jayendra Patel. He is the founder of the company and he has more than 25 years of experience in the finance sector. He was in USA for around a decade where he completed his education. And after completing his education, he joined a business firm in US itself uh, called CAPS Pharmaceuticals, and he was a company executive there. And during his stay in USA, he successfully turned around two sick units of theirs into profitable units. So then later he returned to India, and then yeah, obviously he devoted his time to Arman by founding it in 1992. Then we have his son, one of his sons, Mr. Alok J. Patel. So these three are the promoters of the company, and yeah, he's Alok J. Patel is the joint MD, and he has been associated since 1992. But like he's a generation entrepreneur. He completed his education in commerce and law from Gujarat University. And then he has worked as an independent auditor for KPMG for almost 4 years, where many of his clients were like Fortune 100 list companies. And he also brings experience from John Deere Credit, the equipment financing arm of John Deere and Company. Then we have Mr. Ramakant Nagpal. He is an independent director. Sorry. Yeah, he's an independent director, and he has over 35 years of experience, and he has worked with Central Bank of India, Bank of Baroda, HDFC Bank, etc. He was the senior internal auditor of Central Bank of India, where he played a crucial role in unearthing scams and frauds. So he has also carried out a large number of special audit assignments involving inspection of large borrower accounts for reporting of diversion of funds and unearthed maritime import or export LC frauds. And then we have Mr. Yash Shah. He is a finance professional and he specializes in the field of M&A, mergers and acquisitions. He's currently a partner with DBS. They have an organization with 12 chartered accountants and offices in Ahmedabad. And he heads the overall business development of the firm and ensures all projects are run with utmost efficiency and to the best of the firm's ability. So prior to joining DBS, he worked for nearly 3 years at KPMG in Mumbai, where he was a part of the M&A division. So during that time, he worked for clients like Siemens, Orchid Pharma, CRMs, Wimco, etc. Then we have his second son, who is Akash J. Patel. He is more experienced in the computer and technical side. He has 10-year experience in that field. and he has worked with several companies, including Deloitte, in HP, IntelliTools, then etc. So then we have his wife, Srimati Ritaben J. Patel. She is a highly accomplished professional with a background in economics and banking. She holds banking qualifications from the First National Bank of Chicago, and then she has worked with various banks in the US, like Gulf Mill Bank, Morton Group Bank, etc., etc. So she has also been with him, been with Mr. Jayendra when he lived there for a decade. So then we have Mr. Mridul Arora. He he focuses on consumer internet or mobile investments, etc., fintech side basically, and he is a nominee director of SEF, sorry, the Elevation Capital, which is who holds around 20% in the company. So he was also an engagement manager with McKinsey, etc. He's a nominee director, so there's not much to say about him. Then we have Mrs. Geeta Solanki. She's an independent director in the company. She's a social entrepreneur, and her field of focus is women's health, hygiene, social development, etc. She has worked for 6 years in improving women's health during pregnancy, etc. And as a woman with she's involved in rural agriculture, etc., and taboo, and then even menstrual hygiene. So she has her own company with unique products that are tailored towards educating and providing women hygiene care. So she has a connect with the bottom of the pyramid customers basically, and she has supply chain access, etc. So her expertise, I'd say, lies in the areas of social entrepreneurship and women's health. Yeah, so she has experience working with rural communities basically. So I'd say they have a very interesting board. They have 9 people on the board altogether. And I feel compared to the other two companies that had analyzed, this board is comparatively stronger and well structured. Talking about interviews, I could find interviews about Mr. Alok. So he seems to be very well spoken, and he speaks with a lot of awareness and seems very calm with the kind of questions he's asked, and he speaks very point to point, cut to cut, accurate types. And he's also cheerful. He um, tries to crack jokes in between, etc. So it was interesting watching him talk. In the first interview, he talks about basically the after effects of COVID, etc. He talks about clean repayment history, and then how MSME enterprise loans have a slightly higher potential for growth in the longer term. Then he also talks about the potential for opening branches in unprecedented areas of Haryana and Rajasthan, and how that will also help them bring in more demand for the company. And then he also talks about how during that time they had a new system to accept cashless payments through unique QR codes and a new system, etc. He also mentioned that their business model primarily involves doorstep collections, and the first lockdown announcement had a mostly positive impact because the duration was short enough where it would not have like material impact on the client's livelihood. So however, later on when the second wave happened, etc., it did affect them negatively. So in the second interview, he talks about again, this was also after COVID. So he also talks about how pushing for repayments during the second wave of the pandemic did not seem like the right thing to do for their staff members and clients, since they do doorstep collections, etc. This was difficult because they lend mainly to rural localities, etc., and the underserved communities. He mentions that they made lots of aggressive write-offs during the COVID period, etc., which we see in the slides later on. And third interview is 2016, so I'm not really I don't really have anything to say about it. It's too old as such. So then let's go to their holdings. Already mentioned this. Jayendra Bhai and Jayendra Patel, his wife and his son, they have holdings. They are the only people on the board who have holdings in the company. Other than that, nobody else holds any shares of the company. Then we'll go to the risk mitigation and underwriting part. So firstly, let's talk about the demonetization crisis. So yeah, their OM pretty much did not get affected uh, significantly. Rather, they continued the growth slowed down, but um it gradually increased. Yeah, so demonetization as such, it was more of a temporary disruption for them. Yeah, not much of an effect. But if we see their PAT was affected. So actually, even during this time, they raised additional capital worth like 33 crores from NCDs. This was the first time in their like company's history that they had opened another channel for getting long-term funding. So, but also during this period, they consciously like they stopped disbursements in the microfinance segment post demonetization until they thought cash liquidity returned back to the rural markets, because everyone in the rural region, they do not have, compared to urban dwellers as such, they did not have as much access to liquidity. So they created systems to start disbursements through bank transfers. They opened new accounts for customers that were unbanked. Then all disbursements in UP and Maharashtra region happened via electronic transfer after demonetization. So yeah, their main focus was on repayment and maintaining the asset quality during this time. And till March 2017, they they almost did little to no disbursement. And then for the first time in history, like I said, their PAT in quarter 4. I mean, I don't have the data for quarter 4, but you can see the data for FY17 and FY18. But they have mentioned that the first time in quarter 4 they had to declare a loss, and yeah, due to basically the added provisioning that they had to do because of demonetization. Then yeah, they also made even though during this period they faced a lot of problem, they made like a space in the MSME sector itself. So yeah, their write-offs increased from yeah, sorry, yeah. So the cost to income ratio, we can see that too increased during demonetization. These are pictures that I've directly picked up from their quarterly investor presentations, because they did not really list out their quarterly figures during that time. And yeah, so their write-offs increased from 73 lakhs to 3.2 crore during the same period. So this is why we can see that PAT and everything was affected. The price to book value as such, it was not affected. We can see it increased from 2 to 2.4. And then yeah, their GNPA, yeah, GNPA and NNPAs, like I said, their write-offs increase, etc. So obviously their GNPA, yeah, the NNPA data was not available again for this period. So the GNPA, we can see it increased, the provisions and write-offs, it increased again. But their collection efficiency was still 99.9% during the period. So yeah, so in I think yeah, in quarter 4 of FY17, they posted a profit of 0.94 crores as compared to the quarter 4 of FY16, where uh, they had to post a loss for the first time of I think 0.75 crores. So according to Alok Patel himself, the company experienced high stress during this period, but what they would refer to it is as more of a speed bump than a roadblock. So it was a temporary disruption. Yeah. Yeah. Lastly, yeah, I forgot to mention ROA and ROE is also dipped during this period, but we can see in FY19 they were right back up, and rather they were higher than the previous pre demonetization period. Then we move on to COVID-19 crisis. So yeah, here we can see again their OM as such. The growth, yeah, it became slower, but it was still gradually increasing. In quarter 2 and quarter 3, we can see it fell, but then in quarter 2 of FY 2022, it was back up to 742 crores. Then yeah, so So the lockdown, etc., had a severe impact on their customer base. Majority of their customer base, basically the semi-urban and rural markets. Uh, so yeah, so it was highly disruptive this period for them. So yeah, GNPA and NPA, we can see it increased during this period largely because their provisioning had increased majorly during this period, and then they had to, yeah, they had to recognize additional provisions uh, due to COVID. So their total provisions and at the end of quarter three of FY21 stood at 52 crores, uh, which was like 7.2% of their entire loan book. So yeah, their profits etc. did get affected. That's why even their ROA and ROE numbers fell. If we see they were on, if we see like before that the range was something 25%, and then the ROA was 1 to 2%. Then yeah, their price to book value as such, it did not really get impacted. Uh, but yeah, they managed to, from the start of COVID to kind of the post-COVID period, they got it from 2.4 to 3.7. Then yeah, their disbursements post-COVID, they saw a 99% repayment rate. So they were kind of um, getting into a safer space, I'd say. So we can infer that like even though COVID-19, we can see it had an impact on their ROE figures, even their NPAs, then even their provisioning increased. But they were like able to manage it well, I'd say, in terms of like minimizing the impact. And they also like witness growth here, like in terms of their and also their disbursement that too increased, and their repayment rates were also fine by the end of it. So, and asset quality, the only option they had was recognizing additional provisions, which they did. They also uh, recognized provisions for doubtful loans, etc. Then, if we see that DPD, that days past due like analysis in the 30 plus and 90 plus DPD. So, as of March 2022, it was 8% and 5% respectively. Whereas in 2021, it was 10% and 5%. So even with that, they managed to suppress the figures. So I feel that COVID, they handled it pretty well when we compare it with all the peers, peer NBFCs and NBFC MFIs. Then we go to their risk mitigation. There's a lot of data here, but let's just only focus on the headings, that is instant verification and instant first level credit assessment, traceability. The rest is all basically how they've included technology in each of these processes. So yeah, they primarily focus on renewing loans of existing customers who have made timely repayments or completed their tenure, etc. So this is how they minimize the risk of default and maintain their asset quality. In MSME and two-wheeler segments, they what they do is they increase underwriting filters and reduce ticket sizes to minimize the risk of default. Uh, and they also rely on local resources, and they use data from multiple credit bureaus to improve their asset quality. The company, they use a combination of traditional and digital underwriting methods to assess the credit worthiness of borrowers. So they have a loan origination system, LOS system, and LMS, which is loan management system, to facilitate the instant verification of key details. And this helps them make informed lending decisions, basically. They also use OCR, optical character recognition, and face recognition technology for their KYC validation. And they have implemented, they're trying to diversify their loan portfolio now, and they mix their secured and unsecured loans pretty well across different sectors. So this helps them manage any exposure to any kind of risky borrower or sector. So they also include a credit bureau check, like I said, that is done by CIBIL and CRIF, and they also do physical field investigations and personal discussions too by their in-house credit managers who go and visit the borrower's residence or workplace, and they judge their capacity basically to pay back, repay the loans, and then yeah, they also see their willingness to pay, and they also kind of see what are the chances of them being a risky borrower. So yeah, they basically focus on having a high collection efficiency. So that is why they also do door-to-door collections, like I said. Now we'll go into their forensics analysis. So they did good, 73.9%, 17 out of the 23 checks they got right. But here are a few things that were a little suspicious. So firstly, promoter skin in the game, promoter ownership, we know it's less than 50%, 27.35%, but I guess that is fine because their entire net worth is basically invested in this company. So they have no other companies or any kind of other, yeah, subsidiaries, etc. Then board quality and autonomy, percentage independent directors. So yeah, they have 9 people on the board of directors, and only 4 of them are independent. So that is less than 50%. But however, the chairman himself, Alok Prasad himself, is independent. So yeah, I feel it is not much of a concern, but yeah, but this needs to be further looked into how it affects their decisions, etc. If there's been issues in the past, and yeah, uh, so is the auditor a large, well-known firm? So they're not large or well-known, and they're not in the top 25 or anything. It's called, I think, Talati and Talati LLP. But I searched for info, but I found out that they do audit for Indian Overseas Bank, Pidilite, SBI, Pitti Engineering, then even the Gujarat Water Supply and Sewerage Board, which is a government company. So I feel like in the case of Mass Financials, where we had Mukesh Shah, I think so that company was called Mukesh Shah and um, CAs. So that company was small, but as such, they don't serve all these big companies, and yeah, that's why that would be a cause of concern in the case of Mass Financials. But I think in the case of Arman, since they audit for such big companies and they are pretty well known, uh, I feel like they it shouldn't be a cause for concern. So, does the company pay rent to its promoters or KMP or relatives or of promoter or KMP? Yeah, they do. They pay rupees 21,000 to a company called JB Patel and Company, where Mr. Jayendra Patel is the co-owner. However, I have not marked it for further investigation since it's only rupees 21,000. So, does the company pay loans to or receive loans from promoter, KMP, director, or related parties? So yeah, they have taken unsecured loans from some of the KMPs like Alok Patel, etc., and they are related parties. So that amounts to around rupees 9 crores, and they have also repaid some of these unsecured loans, and that amount is rupees 10 crores. So um, what is the ratio of total contingent liability to consolidated net worth? So they actually, in their annual report, if you see, they have given bank guarantees, and also they have outstanding loans which amount to rupees 365 crores. And there's also disputed income tax um, issue, I guess, which amounts to rupees 8 crores. But the net worth of the company itself is 311 crores. So the ratio comes to 117%. So it is a major cause of concern. So this also needs to be further looked into. Yeah, other than that,
Shantanu,
yeah,
sorry, a quick time check. I think we are running a little short on time, so if you can just speed up a little, yeah?
yeah,
Thanks.
yeah, sorry. Uh, so we'll quickly go through the key metrics now. Yeah, so they're on. They have a 40% plus home CAGR over the last 5 years, and they have seen consistent growth. And yeah, like they keep on expanding their branches. COVID-19, like I said, from quarter 1 FY21 to quarter 2 FY22, we discussed it had impacted. We can kind of see the trajectory there. But then after that, they witnessed a significant growth from FY19 to 9 months FY23. Then even their disbursements have increased during the same. Then book value, they have been able to maintain a healthy book value per share, and it has been consistently increasing over the last 5 years. And yeah, the company is increasing in value basically. If we see their GNPA and NPA, they have shown like a mixed trend from FY19, but that is, yeah, basically because of COVID again. One more correction here. This NNPA, sorry, yeah, NNPA is 1% here. It should be 0.55%. I don't know what happened. I think I made a mistake while making the graphs. It's 0.55%, so it is not higher than the GNPA. Yeah, so the numbers have been gradually improving, though, even when we compare it to the peers further, we'll see why. And they again lend to underserved communities, so they were bound to get affected by COVID more than other companies who don't lend to microfinance. And then, yeah, so while there have been fluctuations over the years, like due to COVID, etc., they have kind of maintained their loan portfolio and their asset quality. So not much of a concern here. Next is ROA, ROE. Here too, we can see that like they had done heavy provisioning during COVID, and there was an increase in the NPAs. So profits declined, and yeah, because of the aggressive write-offs, etc., the ROA, ROE fell during this period. But we can see how it shot up back, how they were able to bring it right back to the previous numbers as of 9 months FY 2023. So yeah, even their profit increased. So they have shown consistent growth when it comes to ROA, ROE too. Then if we go to their pure comparison, yeah, I've compared it with four other companies that kind of are into the same industry who do microfinance lending, and Fusion too is very similar. So even Credit Access Grameen for that case. So in terms of form, we can see all of these other companies are much larger than Arman. And yeah, looking at their GNP and NPA, they are uh, in a similar space, but actually they have slightly better numbers than when we compare it to other uh, any of its peers. So yeah, ROE again, they're doing better than the other companies actually, and like I said, they have pretty much done pretty well with their transition during the COVID period to kind of bring their ROE and ROEs back to the pre-COVID numbers. So lastly, this valuations. Now here, Arman is slightly overvalued when you compare it to their peers. So it's almost at 4x, while the rest are like CA is at 3x, Spandana is at 1x, Saturn is at 1x, and Fusion is also around 3x. So yeah, Arman has a slightly higher PBV ratio. Quickly talking about their future outlook. So they're pretty optimistic about their OM growth, and what they say is that they believe that the worst is behind them, and they are well poised to achieve growth and harvest the benefits of the fairer weather. So their focus will be on scaling up their disbursements in a manner that will fuel their growth. So they're pretty optimistic about it, and they plan to reach the desired like of 2,400 crores or to 2,500 crores sustainably. So again, like Fusion, they are also pretty much concentrated on consistent growth. Yeah, branches, they have kind of added a lot of branches recently. So as of 2022, they added 30 new branches in the MFI MSC segment, completing their branch expansion. But going forward, also, they want to add more branches, and they follow something called the asset-light business model, which I'll talk about in the differentiation. Business units, they focus mainly on small ticket retail loans to the large underserved informal segment customers, like I said. So so they serve to a completely different geography. So they have a conservative like operations framework with a focus, more of their focus is on risk and asset quality management. So furthermore, like the government's like focus now currently on rural and semi-rural India, they anticipate that there'll be more opportunities and demand in the MSME sector. So yeah, they look forward to scaling up in the MSME sector. Yeah, other than that, they are also focused on technology implementation too. So they are trying to implement technology in their ALM framework, etc. We've seen that, and yeah, they're trying to keep up with the digital world. Uh, Differentiation, well, as such, they're not doing specifically something different. except they are, I think, asset light model. But I'll quickly talk about their competitive mode. So their competitive mode is centered around a conservative approach to high-yielding assets to deliver a sustainable ROA of 3 to 5%. So like I said, they focus on small-ticket retail loans to the large, underserved, informal segment customers in rural and semi-rural areas. And then, yeah, their framework is like their conservative framework is like the main aspect. So they have completely in-house operations with bottom-up driven credit appraisal models, and their rigorous collection practices we talked about, like door-to-door collection, etc. So this is how they maintain their high standards of transparency and governance, etc. So underwriting and collection practice also, like as I said, they because of what they follow, they have like now have a GNP of 3.7% and NNP of 0.6%. How they brought it down during the COVID period, even though they were highly affected by it. So other than that, yeah, I'd like to talk about their asset light model quickly. So, asset light model, as in they do not require a lot of capital expenditure to grow their business. Instead, they rely on partnerships and collaborations to expand their operations. Like we saw with the two-wheeler, like I mentioned, they have 70 plus showrooms. They have partnerships with 70 plus showrooms, dealerships. So they basically act as a distribution channel for the company's products and services. So by partnering with these dealerships, they are able to reach more customers without having to spend so much. So similarly, they also have their credit appraisal model that is again in-house. So they don't have to rely on external agencies or consultants for credit appraisal services. So yeah, they try to keep all their processes in-house. This helps them maintain like their costs, etc. Yeah, with that, I'd like to close. Here are a few rewards and recognitions that I've mentioned in the appendix. Thank you.
Thank you. Great presentation again, Shantanu. There are a couple of pointers from my side. One would be, I mean, you were using your mouse sometimes, right? You could actually use a pointer in your presentation, that red
Oh,
pointer. Yeah, if you want to highlight some activities.
yeah.
Over here, I think I think Nirvan and me, we were discussing in chat that having two presentation in a day actually is very fatiguing. So probably in your case, uh, we could see that. I mean, the focus was a bit lost because yeah, you were listening to Surendra before this. So probably from the next time, we'll try to keep one presentation in a day, right? Um, Another thing was regarding the board. So over there, you went through the board. I think you could kind of conserve a bit of time if you probably summarize in a much reduced manner. But however, I think these information are valuable. But I'm actually in a, I mean, we could have saved a bit of time over here.
Yeah, so
Yes.
Gaurav, just to add there, so Shantanu, maybe you can constrain yourself by talking about only the two most important things about each person in two crisp
Okay.
sentences. Yeah. So
Yes.
not more than that. That would sort of save time here. Yeah.
Yeah,
Sorry,
and the
Gaurav.
rest of the thing you can just add it over there as text, because anyways this PPT could be read through. I mean, will somebody can read through this PPT, right? So
Yes.
that way, overall, I think you have done solid research. I mean, there's no question about that, and your PPT is very crisp and clear. So like all the previous PPTs, I really enjoyed this one as well. In general, Arman is something I wanted to kind of know more, so I have a clarity now from yours. Thank you so much.
Thank you.
Shantanu, I would like to just take you to your slide where you were presenting the business lines. So there was a slide where with arrows, right? That they're into, yeah, this one, yeah. So you remember you gave a lot of very valuable data about their MSME, saying that
Uh,
they took a conscious decision to play within 50 to 5 lakh. There's nobody,
yeah.
so they identified that. But that, unless I replay your recording, I will never get to know that, right? So
Yeah.
there was a long period of time, Shantanu, when you were speaking, and this is in general feedback to everybody. This I've noticed, for from all of you. See, the reason is, I am again repeating. I had said this before also, that this PPT is also going to be read later on, right? So it's a PDF plus a PPT voiceover, right?
Mm.
So Here, one suggestion would be, Shantanu, that maybe below microfinance, MSME, just in a
Yeah.
just put a hyphen or bullets and just mention the keywords, okay? Like conscious choice to play in 50,000 to 5 lakh or something like that. So that, somebody who does not have the benefit of your voiceover, suppose the PDF is circulated to somebody, they can also appreciate that was actually very important things you were saying there. Yeah.
Yeah.
So I feel that what all of us as a team have to realize is the most important things in each slide, right? If we are able to capture that somehow in the slide somewhere, okay. I know it's a challenge. That's why PPT making is an art which takes time to learn. But I hope you get my point, Shantanu. So
Yes.
that for me to analyze how this company is trying to differentiate itself, that's an important information. So if you can find a way to capture these things. Yeah. Second and final question from my side is, this company has been listed since FY06. Okay. So
Hmm.
that's 17 years. अभी तक इनका AUM 1200 करोड़ है, और वो भी 5 साल
Yeah.
में देव ग्रोन एट 40% कैगर. मतलब FY17 तक देवर सम 600 करोड़ AUM. ये कर क्या रहे थे? मतलब did you get a sense of what happened and why haven't they grown?
Uh, yeah, because initially one was their geography. That's
Hmm.
what even in their interview they had mentioned. They operated at a very small scale initially for the first 10 years itself.
After
So
listing.
yeah,
Okay.
so
Hmm.
yeah, even back then they were very small. So other
Hmm.
than that, I could not find a specific reason because other companies, their peers itself are doing arms of 8,000 crores, 6,000
Yeah, I
crores.
mean, people who have just been listed, they
Yeah,
have come with huge arms, and they are so now they've changed that strategy and now they are growing aggressively, is it?
yeah.
Okay, okay.
So last 5 years itself, they're kind of they're on the run. Other than that, I don't know why before that they didn't try like other
Hmm.
methods as compared to other companies.
Right.
I think one thing we could learn is like DMart or delivery, these kind of companies where they had, I mean, they had a starting business where they used all their knowledge and they focused on it and improved their processes. And then once those were kind of aligned and it was scalable or repeatable in other centers, they probably expanded. But this is something you might, I mean, you can dig deep and find out a bit.
Yes.
Yeah, makes sense, Gaurav. That analogy makes sense. But when I was looking at their performance versus competitors, see,
Hmm.
it's not like they're hitting it out of the park like DMart, right? So credit access is equally good. मतलब तुम अगर
Hmm.
metrics देखोगे, so that's what I'm wondering. But anyway, growth is there now. So what we as investors are interested in कि अभी कितना growth हो रहा है. So I think, yeah, whatever the reason they didn't grow, hopefully they'll be able to grow now. Right. It's been a long session, guys. Any questions? Please ask. Okay. No questions, I think. Thank you, Shantanu. I like all of your presentations. I enjoyed this one as well. Thanks. I'll send you some further investigation areas. Yeah.
Also, I don't understand one thing
Yeah.
here is that like if like Fusion is pretty much doing the same thing.
Yeah.
So even they operate in the same region,
Yeah.
but they focus only on microfinance and women or lending to women.
Right.
So why couldn't these people have done it before itself and
Yeah.
instead
So
chosen to diversify also? But with diversification, there's a lot of competition also that comes in. So
see,
I
but
don't know.
diversification, Shantanu, to be honest, you've shown four things, but
Yeah,
from your
yeah,
arm split, it's very clear it's only
yeah,
MSME and microfinance, right? Their vehicle financing is degrowing massively and they'll shut it down mostly. And
yeah.
like you said, it's only Gujarat.
Gujarat.
So, see, they are only in MSME microfinance. One more company, I think, that is in their same zone is Five Star. Okay. So
Hmm.
you didn't compare with them, but I think they are also in the same kind of business. Yeah. They may not be doing JLG, but they are in that MSME segment
Ha.
of 2 lakh, 1 lakh, 2 lakh kind of ticket size. Yeah.
Acha.
So yeah. So that is one thing, Shantanu, if you can dig into a little, along with
Yes.
one more question on contingent liabilities, alarming number. So I just
Yeah.
want to understand what kind of liabilities they are. Okay.
Yeah.
But since it's late, I will not spend time right now here. We'll connect offline for this.
Oh,
Okay.
sure.
Yeah. Thanks again, Shantanu.
Thank you. Thank you so
Thank
much.
you. Bye bye. Good
Thank
night.
you. Yeah. Okay, guys.
Bye.
Thank you so much. Bye bye.
Thank you,
Bye
everyone.
bye, guys. Great presentation.
Thank you.
Bye. See you guys.
Bye bye.
Bye.